Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, and we're sitting here now on the 21st of July, 2025, and the time about 6:20 p.m. Central Time. So I had some time, and I figured I could put one of these out. I don't know that I'll be able to do every night one. It depends what my schedule looks like while I'm out of town, but I do like to keep up, and I was able to put out the morning subscriber videos for everyone, and I'm pretty happy I did. It was a good trading day. So let's take a look at the news you're going to get in the market. First, Fox is reporting that representative member of the House of Reps, Luna, going after Fed Chair Powell. It should mean nothing. People don't realize this was a building that needed massive work, built in 1930, full of everything wrong in that time frame. They're not putting in special rooms for the VIPs and all that, but they had asbestos problems. You had to lift the building, believe it or not, to fix the foundation. Everything I'm reading, all the members knew it, and they all voted in favor of continuing on. And yes, there are cost overruns. Who builds anything and comes in under? Nobody. Redbook Group, they're going to update their weekly U.S. retail sales data at 755. It's been running about a 5.25% increase week over week. The Richmond Fed will update their monthly manufacturing index for July Tuesday morning at 9. We'll see. We are now seeing manufacturing has picked up. The Philly Fed went crazy, Empire State, so I'm hoping this is a trend. And last, we'll get the API stockpiles at 3:30. Do remember, we're in the blackout period for the Fed, where Fed members rarely are saying anything now on monetary policy. All right. As we take a look at where you're at, let's assume that the market finished here and it was Friday. This would be an all-time high close on the S&P. How could you be anything but friendly? And as I teach you, you always look to see where this 18-week moving average of closes is. And if the market's over it, you never have a bear bias during that. You only have a bullish bias. So that's one of the rules. If we take a look at how you're doing here, I'm narrowing this in because I wanted you to see how the market came back when we look at the daily chart. And here's April 7th. It never looked back. That was the washout. Scared a lot of people, but unusual that it didn't do a retest of some type. And it really didn't. And it's just been up and away all the way through it. You now have made, today was the highest record high you ever had in the S&P on the futures markets. You're backing off a little bit, but so what? Off the highs. You're still doing very well on it. You're staying over the 18-day average of closes, which is over the 100. The 100's over the 200. That, in parlance of charting, is called a bull formation. And that bullish formation has been at work for quite a while in keeping the market neat. You had a correction and you went back into that formation on June 23rd. So we're a month later, and as you can see, it's never gotten over that key average. But I do want you to be careful. You only spend outside of a Bollinger Band 5% of the time, and that's these black dashed lines. Look here, you can ride them to push them out, but you don't stay outside of them for that period of time. This market's bullish. It may want to do that, but this is a resistance point. And the first time it's hit is normally where pros will take, I believe, something off the market. And you don't want to see the slow stochastic, which has an 82 reading right now. It's in pretty good shape. Lose that reading. It hasn't done it, but if it does, that would give me an idea that a correction is going to ensue, and we'd be looking for 62.92. In the NASDAQ, it's up and away. The tech stocks continue to lead the game. Don't get me wrong, we're seeing manufacturing come up. There's a lot of good plays that are out here. Higher lows, higher highs, and you're running into the upper Bollinger Band. In the Dow and the Russell have been the two laggards. You can see you've just been sitting here. You're in a correction phase back to it. They can catch up at any time. They'll probably catch up as the rotation happens if the NASDAQ and the S&P were to pull back. And as you can see, you're not going anywhere just yet. In the Russell, still correcting an overbought condition. That can end, as I just said, as the market flip-flops. The DAX would be in trouble only if prices, in my opinion, get back under 44.41. We've had a market that had a bull run, pulled back to the 18-day average of closes, and I want you to listen to what I just said. pulled back to the 18-day average of closes. Chart upon chart upon chart is doing this right now because you've been in patterns where you've run to the upside and the markets are pulling back to them. In a bearish phase, the market rallies up to them and fails. And that's where you're at in the 30-year bond and the 5-year note. So they are not in bullish phases at all. In the dollar index, I think you can get back to that moving average tomorrow. You're all of it 20 points away from it. So it's 25 points. You expect it to do it. Remember, that number is going to jump tomorrow as it's been going up on average about 4 points a day. In the eurocurrency, we bounced off the lower Bollinger Band into that 18-day average. And in the process, the market is no longer in a bear phase, but it's not bullish either. We're in no man's land. British pounds is giving me all kinds of reasons to expect a rally higher. It's got the swing line turning up, but you're staying under that key 18-day average, which means bearish bias. I'm expecting what I'll call a bear market rally into that 18-day average to see what develops. You lost the really bullish part of the slow stochastic reading right here in Bitcoin. And when it lost it specifically on July 15th. And as it lost it, the market is starting to correct. Before it goes back for its all-time high, my theory is, and that's what it is, my theory, before you get over 123,610, the all-time high, you'll correct down from there to the wherever the 18-week average is, or day average rather, and right now it's 113,356. So there's a ways it can go here. From here, probably $4,000 a coin. In the crude market, we're pulling back to the 18-day average for support. Identical thing in the WTI. There's nothing to do because you're over them and yet the swing lines are down. Same thing in the gasoline market. And natural gas, as much as they talk all this heat, you're not seeing that action really show up in the market. And that's always very important.